Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. If you've been watching the charts this week, well, you know the global crypto market is in this strange sort of pause.
Yeah, it really feels like it's holding its breath.
It's November 12th, 2025, and everyone seems to be waiting for, some clear signal, something definitive to really move prices.
That hesitation is, you can almost feel it. It's showing up in some pretty surprising data points, too.
No kidding. Let's start right there with the ETFs. We checked this across, multiple sources because it's genuinely rare. Over the last 24 hours, Ethereum ETFs, zero movement.
Zero, like neither inflows nor outflows.
Exactly, nothing.
Yeah.
Which suggests capital is just parked, waiting. Bitcoin ETFs did see a little something, though.
Right, I saw that. About $1.2 million in inflows for the last trading day. Still pretty small, relatively speaking.
Tiny.
Yeah.
But when you see a major player like Ethereum ETFs completely flatline like that,
yeah,
what does that tell you?
It tells me the market's playing defense right now. Risk avoidance seems to be the name of the game.
Okay, so that sets up our mission perfectly for today. We're going to dive into three really big interconnected stories. First, that political resolution in the U.S. that gave us a quick flash of relief.
Fleeting relief, yeah.
Then, this high-stakes, almost unbelievable $15 billion Bitcoin seizure drama. It's turning into a real geopolitical thing.
Oh, absolutely, between the U.S. and China.
And finally, how a stablecoin giant, Tether, is using its huge reserves to make this really aggressive push into building AI infrastructure. Big stuff.
Lots to unpack there.
All right, let's start with that temporary relief rally. Washington, D.C., they finally ended that. Was it a record 40-day government shutdown?
Yeah, 40 days, purely political gridlock by all accounts. Ended Sunday night when 8 Senate Democrats essentially agreed to pass a continuing resolution.
And the market reaction was immediate.
And oh yeah,
Classic relief rally. The immediate threat of, total systemic chaos was off the table, at least for a moment.
We saw S&P futures jump, what, 0.7%?
Yeah.
Led by tech,
Yeah.
naturally. NVIDIA, AMD, Broadcom.
Yep. And crypto got a bump, too. Bitcoin briefly popped over $105,000.
But it's not just relief from the shutdown ending, is it? There's this anticipation of actual money flowing back in.
That's the crucial part. The reopening means resuming things like back pay for, I think, around 800,000 federal workers.
Yeah, and SNAP funding, too, the Nutrition Assistance Program.
Right. Some sources are estimating that could pump maybe $10 billion a week in liquidity back into the economy.
And for markets, especially crypto, that kind of short-term consumer cash injection can be fuel. Plus, there's still talk about another round of stimulus checks.
The $2,000 checks potentially funded by tariffs, yeah. That's still being discussed.
So short-term, things look a bit bullish from that angle. But you said fleeting relief earlier. Why?
Well, because zooming out, the core uncertainty isn't actually solved. It's just kicked down the road. This funding bill only lasts until January 30th, 2026.
Oh, okay. Not very long.
No. And there's still another vote coming up in mid-December about Appropriations Committee funding, so the political risk hasn't vanished.
So the price bump was more emotional. A reaction to getting a deadline extension, not solving the underlying problem.
Pretty much. Which explains why the fear and greed index, it's up from like 20, which was extreme fear, but it's still only at 31. Still fear.
Still nervous. So the market's thinking, okay, maybe a short-term lift, but watch out for midterm volatility.
Exactly. Lots of uncertainty still baked in.
It's interesting. While U.S. politics is sort of patching things together short-term, we saw a major DeFi player, Uniswap, make a really significant move towards long-term sustainability.
Yeah, the contrast is pretty stark, isn't it? Government struggling with budgets, and Uniswap rolls out this unification plan. They're fundamentally changing how the UNI token works.
What's the core idea?
They're burning 100 million tokens, making UNI deflationary, and crucially, linking it directly to revenue generation. It's kind of like a corporate share buyback, but for DeFi.
Okay, making it more sustainable, more like a traditional business in some ways.
Exactly. It's about creating value for token holders directly from the platform's success. Uniswap makes, around $2.8 billion in fees annually?
Yeah, roughly.
So this plan means they'll be buying back and burning about $38 million worth of UNI every single month, taking revenue, reducing supply.
Smart. And the market liked it.
Loved it. UNI jumped something like 47% in 24 hours just on the news.
Wow.
It really shows, I think, that investors are hungry for projects with clear, sustainable financial models, especially with all this other uncertainty floating around.
Okay, that makes sense. Let's pivot now to that second story, the one that feels like it's straight out of a movie, this $15 billion Bitcoin seizure.
Yeah, this is a wild one. It all goes back to December 2020, a huge hack of the Lubian mining pool.
Right, they lost 127,272 Bitcoin.
Which was worth maybe $3.5 billion then, today?
Yeah.
$15 billion. And the funds supposedly belonged to Sanji, the chairman of the Cambodia Prince Group.
Okay, so huge theft back in 2020. Now, fast forward to just last month, October 14th, 2025.
Yeah.
The U.S. Department of Justice comes out.
Right. The DOJ announces charges against someone named Shenzi, and they say they've seized 127,000 Bitcoin.
Almost the exact amount stolen from Lubian.
Precisely. And this is where it gets really heated. China is now claiming, based on on-chain analysis, that the U.S. government wallets holding those seized Bitcoin, they match the exact addresses from the 2020 Lubian hack.
Whoa. So China is basically accusing the U.S. of what? Either orchestrating the hack or seizing it much earlier and disguising it.
The speculation is running rampant. Was it a coordinated operation, an early seizure hidden as a cyber attack? It's a massive accusation, essentially suggesting state-level involvement or at least knowledge way back.
That's explosive stuff.
Yeah.
Do we know how the original hack even happened, technically?
Yeah, and it's almost embarrassingly simple in hindsight. A classic security failure. They exploited a weak random number generator used for creating private keys.
Not truly random.
Basically, yeah. A flawed algorithm, MT1993732, I think it was. It dramatically reduced the entropy, the randomness, making it possible for attackers to brute force thousands of wallets. Took them about 2 years, apparently.
Over 5,000 wallets cracked. That's a huge lesson for the whole space about fundamental security.
Absolutely. It hammers home why you need cryptographically secure random number generation, multi-sig, cold storage. The basics, but done right. You can't cut corners when billions, now potentially trillions, are on the line.
Has the U.S. DOJ responded to China's specific claims about the wallet addresses?
Not yet, as far as we know. Silence so far. But the market has definitely reacted.
How so?
Well, this whole drama, the fear around government seizures, the questions about security, it seems to have pushed a lot of people towards privacy coins. We've seen pumps and things like Monero, DC, Zcash, people looking for ways to, shield their activity.
Interesting. Okay, so that high-level risk and the security concerns lead us nicely into our third major story, Tether's big pivot. What are they up to?
This is a really fundamental shift, I think. Tether is taking its massive stablecoin reserves and pouring them into becoming a hardware and infrastructure player.
How?
They've partnered with Rumble, the YouTube competitor, and they're acquiring a company called Northern Data AG. The whole point is to massively scale up cloud computing power.
We're not talking small scale here, are we?
No way. The deal adds something like 22,000 NVIDIA GPUs. 22,000.
Wow.
And expands their data center capacity globally to nearly 100 megawatts. It's a huge infrastructure build-out.
And they're funding this how? Just committing Tether reserves?
Well, they're committing $150 million just for the GPU services, plus another $100 million for a big 2-year ad campaign for the Rumble wallet, which is going to integrate USDT and Bitcoin.
Okay, so let's break that down for the listener. Why is this such a big deal? A stablecoin is meant to be, well, stable, low risk.
Exactly. And Tether is taking that low-risk treasury, essentially, and investing it heavily in building this massive distributed infrastructure layer. They seem to be aiming it at decentralized AI and computing.
So they're trying to become a hardware provider, like a decentralized AWS or Google Cloud.
That seems to be the play. They're already the money layer for a lot of crypto, right? Now they're trying to build the computational layer underneath it. It's incredibly ambitious and maybe a bit risky, using stablecoin backing for that kind of venture capital style bet.
That's a fascinating move. And it's happening just as regulators are getting more serious about stablecoins themselves.
Yeah, perfect timing almost. Look at the UK. The Bank of England just put out a major consultation paper. They're building a regulatory framework specifically for sterling-based systemic stablecoins.
Systemic meaning the big ones, the ones that could impact the whole financial system if they failed.
Precisely. They want them to be as trustworthy as regular money. Final rules are expected by 2026.
And what are the requirements looking like?
Pretty strict on collateral. Issuers would need to hold 40% of their reserves in non-interest-bearing deposits directly at the Bank of England.
Okay, super safe.
And the other 60% can be in short-term UK government debt. So very low-risk assets. It's about building confidence through regulation.
Meanwhile, back in the U.S., Coinbase is trying to bring retail investors back into token sales, which hasn't really been happening since, 2018?
Yeah, they've launched a regulated token sale platform. First project up is Monad, running mid-November.
And how are they trying to make it different this time? Avoid the craziness of the ICO boom.
They're aiming for what they call fair distribution. The system apparently gives smaller buyers a better shot, but it also penalizes people who flip the tokens immediately, trying to discourage pump and dumps.
Requires verified Coinbase accounts, bids in USDC. Sounds like they're trying to professionalize it.
Definitely an attempt to create a more sustainable, regulated path for new projects to launch to retail. We'll see how it goes.
Okay, let's wrap up with a quick look at global adoption, specifically the Middle East. Seems like a lot is still happening there.
Absolutely. The UAE continues to cement itself as a hub for, let's say, sophisticated digital asset money. We saw Lean Soul Global Partners teaming up with G3 Partners to expand there.
And who are they targeting?
High net worth individuals, family offices, the existing virtual asset service providers. It's about bespoke management, integrating digital assets into serious wealth planning, less about retail hype, more about attracting established capital.
Makes sense for the UAE's positioning. And then Saudi Arabia is using AI for something pretty practical.
Yeah, tackling a big supply chain problem. They've partnered with a company called Red Cloud using NVIDIA's tech, specifically an optimization engine called QRP.
What's the problem they're solving?
It's in the fast-moving consumer goods sector, which is huge, like $62 billion there. But there's apparently a massive inventory gap, maybe $2 billion lost because of bad supply and demand matching.
So AI to fix inventory.
Basically, yeah. Automate decisions, improve the data flow. They think it can recover maybe 35% of that gap.
Which translates to?
Almost $2.8 billion in added trade value. It's significant. And it ties directly into Saudi Vision 2030, their whole push to diversify the economy using technology.
Okay, so we've covered a lot. The U.S. political situation giving a temporary market boost, but leaving uncertainty.
Check. Then that massive $15 billion Bitcoin seizure becoming this huge geopolitical flashpoint, raising big questions about state actions and security.
Right. And maybe most significantly, Tether's really bold move, using its stablecoin might to build potentially foundational infrastructure for decentralized AI and computing.
Moving way beyond just being the money.
Which brings us to that final provocative thought for you to chew on. Tether is funding this absolutely massive network, 22,000 NVIDIA GPUs. Is this the quiet beginning of them building the core computational layer for decentralized AI?
It certainly looks like a serious attempt.
And if they pull it off, if they become the go-to hardware provider for this next wave of computation, what does that actually mean for the dominance of today's centralized cloud giants like AWS, Google, Microsoft? Could we see a fundamental shift in who controls the world's computing power? Something to think about as these trends develop.